Welcome to Creamer Media's Polity. I'm Brindaveni Naidoo. With me in studio, I have Seeraj Mohamed of the School of Economic and Business Sciences at the University of the Witwatersrand to talk about the appointment of Gill Marcus as South African Reserve Bank Governor and the future of South Africa's economic policy under her leadership. Welcome, Seeraj. Tell us, Seeraj, do you expect any change in economic policy under the new Reserve Bank Governor?
Well, the Reserve Bank Governor doesn't get to change the policies. She has to implement it. And within the implementation, they do have a range of flexibility on how tight or how loose they want to interpret the rules. But it's been made clear by the Minister of Finance and by the African National Congress that policy won't change. So she's going to be implementing the same policies that Tito Mboweni implemented. So I think we can expect to see much of the same unless there is a change of policy within the government. And then we'll see changes in the way the Reserve Bank acts.
In your recent article published on Polity, you described the debate around inflation targeting as a distraction. Why do you say this?
Well, it's become clear, and I think many of us knew this long before, but with the current global economic and financial crisis, it's become clear that it's not about how low or how high your inflation is, it's about the stability of your financial sector that dictates how stable your economy is and how you're going to respond to contagion from elsewhere. And the other important thing is how your financial sector allocates capital within the country, whether it goes to consumption and speculation in financial markets that cause bubbles and people to become indebted, or whether they actually moving money towards investment and long-term productive investment where we can actually have employment creation. So the question of inflation, I think, is one of dozens of variables that affect the long-term economic growth and job creation prospects in an economy. To spend all your time and energy and have hundreds of people working to look at measuring inflation and to spend, hours every month on TV asking economists whether they think inflation is high or low and whether interest rates should go up or down, it almost seems like an irrelevant question. The question is, are we managing and regulating our financial sector adequately in the country?
Just on that point, what is your view on that? Are we managing it adequately?
Well, it's clear from the past decade and a half, since the democratic elections anyway, that the financial sector hasn't changed. We still have a huge unbanked proportion of our population. But also what we've seen is a huge dip in investment from the 1980s. Fixed investment has declined, but also fixed investment in manufacturing has taken a huge knock, and there has been a shift of money into services, but not, I believe, in long-term productive services. We've had investment and we've had allocation of credit by the financial sector in South Africa towards supporting a debt-driven consumption bubble, but also bubbles in our stock markets and bond markets. And so now what we're seeing with the recession in South Africa is the collapsing of those bubbles that had been formed. And so our economy in many ways was similar to the US economy, and our banks had started behaving like the US banks. They started securitizing mortgage debts. They started getting involved in derivatives, and we saw a huge sudden growth in our derivatives markets from 2003 to 2006 that more than doubled in the space of months. So our financial sector needs to be looked at, and policymakers, and especially the Reserve Bank, who has a role of overseeing the financial sector, needs to look at how we regulate the financial sector adequately.
Do you think it will be possible for the Reserve Bank to continue with its current inflation targeting policy while considering your call for a stronger focus on financial regulation and long-term investment promotion?
Well, I think the issue of inflation targeting is going to end up being an issue about political contestation and how strongly those opposed to inflation targeting can push this story. What's interesting is that we're starting to see bank commentators and people not in the trade unions or sort of left-wing academics coming out and saying inflation targeting isn't really a good idea. We had economics Nobel Prize laureate Joseph Stiglitz here a few weeks ago, who basically said that inflation targeting is theoretically and practically unsound. And so there is a huge, I think, academic and intellectual discussion saying that inflation targeting isn't the best thing. But we're also seeing people in the trade unions facing job losses and seeing low investment coming out and being active against it. We saw NUMSA meeting with Tito Mboweni saying we're unhappy with this. We're seeing, I think, a huge part of the ANC membership coming out and saying we're unhappy with it. So there is a huge pressure within the ANC and on government to change. So the change, I think, would be political. I mean, they can continue with inflation targeting and try and re-regulate the banks and shift the orientation of the banks away from short-term speculation and financing consumption towards investment and job creation. But I think if you actually want to have those kind of policies more meaningful and more implemented more practically, then inflation targeting is a huge barrier to promoting long-term investment and job creation in the country.
Thank you, Seeraj. That was Seeraj Mohamed speaking on the appointment of Gill Marcus as Reserve Bank Governor and the future of South Africa's economic policy.